Okay, Shashank, Mr. Bhargav says that he cannot talk about margin, but every time when we speak to you, you do give us a sense as to how things are moving on the raw material side, on the cost side. Given that last year was a very, if I may say, very tough year for Maruti in terms of margins, will this year be a comeback year?
Well, I think Mr. Bhargav made that point already. It's so difficult to predict going forward what's going to happen on the cost structure front. Remember, in terms of any auto OEM, 75 to 77% of the cost structure actually is material cost. And while material costs have been coming down and been relatively lower compared with what they were about a year back, steel prices have formed up. So it's so difficult to find out in net whether the material cost is going to come down or go up, and that is why it's become so difficult to predict the forward margins.
Shashank, the fact that Maruti is coming back with a renewed vigor in the SUV market, how will that change the dynamics this year for Maruti?
Well, surely, I think it's going to be very positive, and we have
Please.
said it that while our projections for the industry is that the industry will grow for between 5 to 7%, our projection for Maruti Suzuki is going to grow much faster than the industry. That means there should be an addition to our market share. So, one of the big weaknesses which we have shown in the past few years has been our relatively low market share in SUV space. In the non-SUV space, for example, last year we had almost a 65% market share, but in SUV we had just 12%. While in Q4 it improved because thanks to our better availability of Brezza and Vitara. In this year with the Fronx and the Jimny, and the Fronx we started sales just a couple of days back. Jimny will be starting in about 3 weeks' time. Which should give us much larger volumes in the SUV space. And in fact, we have said it before, we intend to be the number one player in the SUV market also, so that our overall market share goes up substantially from the 42% that it is at the moment.
How much, realistically speaking, the semiconductor problem is solved? Because a lot of auto companies are still not giving us a clarity on that.
Exactly. And I think the reason why nobody is able to give you clarity is because the visibility of semiconductor based component supplies is not really good. Actually, we get weekly updates because it's a global crisis, and buffers are non-existent. Because of the long period of shortage in this component, and that is why nobody is able to give you a clear picture. However, quarter to quarter, I can tell you, like last year, we lost about 170,000 units overall. In Q4, we lost about 38,000 units because of semiconductor shortage. In Q1 also, the problem persists. And we do hope that going forward from Q2 onwards, the situation will become better. We are already at that 94-95% type of level, but there are some models like the Ertiga, the XL6, the Baleno, the Brezza, etc., where we still find that there is a lot of shortages. And that explains the large pending bookings and the waiting periods that our customers have to endure because of this.
Understanding is that you have an order backlog of about 4 lakh units. Now that's
That's
a
right.
large, powerful, backlog. That's almost like a 3-month kind of an order backlog.
Yes, that's true.
Will that get resolved, or will that be addressed? Because if that gets resolved this year, your sales plus backlog, then you could be in for a bumper year.
Sure. I think, as mentioned before, quarter two onwards, hopefully, we should have much larger productions of those vehicles which are in short supply. And I mentioned those models just a while back. So hopefully, yes, we should add to those numbers in those models going forward from Q2 onwards.
When we spoke to you last time, you did say that, look, there is good news and there is bad news. Some component prices are down, but not all component prices are down. You've taken a price hike, but that was not good enough to go back to your historical margins. As we look into the future for FY24, demand you've already spoken about, let's understand the raw material impact then.
Yeah, so I mentioned just now that while there has been some softening in copper, in aluminium price, even the rare earth, rare metal prices, palladium, etc. But they are offset partly by the increased steel prices. It's about 6-7 rupees kg increase for steel there. And by the historical perspective, of course, these prices remain very high. So, for example, copper 2.5 years back was $5,200, went up to $10,400. Now around 9,000 or slightly less, but still, when you compare it with 2 years back, still pretty high. And we can't really see a situation where you will have those type of prices again, and it's very volatile, and that's the reason why we have not been able to give you a forward guidance on which way the raw material prices will move. At the moment, except for steel, they are a bit more benign.
Okay, so the only constant seems to be the uncertainty. That's the word coming in. Thank you, Shashank, for joining us today and talking to us about how the growth outlook is looking like.